Good morning, Richard Calhoun, Creekside Realty. We're here to discuss week 17 in the real estate market. Skipping right to the first data slide, and this is a different one than we normally look at. This is looking at the pressure the buyers are feeling, the sale price to list price ratio. Each line represents a different week. The dotted blue line down here is the worst month we ever had. Red dotted line in here, which is hard to see, is the best month we ever had, which was March of 2022. The solid lines are the most recent. The purple is the current week. The dashed lines are the second most recent, and the dotted lines are the oldest. So what's this graph really telling us? It's saying that the market improved because you can see the dotted lines and the dashed lines and then the solid lines. But now in the last couple of weeks, it's been coming back down again. You can see that the peak week is probably the green line, which was back around March the 26th. The light yellow orange line here, April 9th, was essentially tied. So that's basically the plateau. The 16th of April, the gray line is down a little bit, but right up there with the top two. Then you get down to the burnt orange and the purple. The last 2 weeks are down here. So it's a very strong marketplace. Don't get me wrong. You know, when you say 55% of the sellers are getting 10% more than their asking price, it's a strong marketplace, but it's showing us that the market has cooled. That's typically happens. And also remember, these are sale prices. So even though the peak of the market was basically that window, you know, March 26th through about April 16th, the real peak that those offers were generated was 5 weeks before that. Here's the same data, but just a little less of it, so it's a little easier to see. The concept's the same. The dotted lines are the oldest, followed by the dashed lines, and then the most recent ones are the solid lines. Here you can see the yellow line, April 9th is right at the top. You can see the gray line, April 16th is right at the top. You can see the dashed green line, March 26th is right at the top. And you can also see that it looks like April 2nd is right up at the top. I think those are all at the right at the top, but then you can see the burnt orange, the 23rd last week, and the purple line, the 30th this week, are towards the bottom of the group. It is noteworthy the dotted line back here is February 12th. If you go back and think about it, 5 weeks before that, you're basically right in New Year's. Some of those contracts were going to be negotiated in 2021, right over the holidays. So that's the pressure the buyers are feeling. What are the actual dynamics of the marketplace? Here we're looking at total available inventory, the blue line. So you can see we're at about 80% of the total inventory you'd expect to have. That's basically where we were at this time last year. We did start 2021, which is not on the graph, at about 140% of the inventory you'd expect. It went down, then it leveled off at about 100% for a couple weeks that we just went through. Then it got down to 80%, spent most of the year at about 80%, but basically starting around Labor Day, it decreased and got down around 60%. 60% is what we started this year off. You can see that we were still just at 70% done 2 weeks ago, but last week we did a big jump. Partially that was because Easter holiday, sellers hold off on putting their homes on the marketplace, then they put their homes on the marketplace and it takes time for the inventory to get eaten up. So that's the total available inventory. The next part that we're going to talk about is the new inventory that's coming on the marketplace. And that's key because that's where the most of the activity happens. The inventory that's been on for a week has been picked over and is much slower to move. Gray line is the inventory that's new for the week. And you can see for Easter, it dropped down, which is completely normal. But then the week after Easter, which is usually a little bit busier, and since Easter moves from about March 21st through about April 25th, if I got my days right, there's a 35-day window that Easter occurs in. You would expect this to be above the normal, and it was below. And then this week we're down below. So this is sort of starting to say that the sellers that wanted to sell have sold, and now we're having less inventory come on the marketplace. So with fewer sellers coming on the marketplace, that's going to tend to keep the market hotter. Finally, let's look at the demand side, the red line. So you can see with Easter, it dropped way down, and it dropped down following the lack of the inventory. Inventory came back up and so did demand. I still maintain that this is an inventory related issue for a significant portion because the number of offers falls a week after the number of new listings coming on the marketplace. Moving on to the supply demand ratio. This is the ratio between the two so you can see them. The yellow line is the 5-year median 2015 through 2019, which were 5 great years. They're the 5 years before the pandemic. The blue line that almost looks looks purplish with the red is the current data. So you can see that we're fairly close together, but I would actually still maintain there is a difference between 21 days of unsold inventory and 25 or whatever that number is. It doesn't sound like much, but it is hard to get below about, well, I'm not sure I've seen 15 days for a large area. Actually, we'll probably have micro markets we've seen as low as like 5 or 9 days, but it's harder and harder to get lower. So it's hard to go from 25 to 21, much harder to go from 25 to 21 than it is to go from 29 to 25. But again, anything below 40 right here is what I consider to be a red hot seller's marketplace. And just because you have a balanced marketplace, when you go right up here, for example, last year, everybody would have felt it was still a seller's marketplace. So it's a graduated scale. It's just harder for me to do that. So I do gray solid lines, cut points, but it's a interim process. And if you've been real hot, that even when you got up here to like 55 days of unsold inventory, most people would have still felt that it was a seller's marketplace. They would have felt the slowing, they would have felt a little relief, but they wouldn't have said that it was a balanced marketplace. And that's just because of where the history of the market had been. But again, the big takeaway is when you're down below 40, super hot marketplace, overbidding, fast moving marketplace. And when you're down around 21, that's just on steroids. This is looking at the key components. We're starting off with inventory, and I will point it out because it's a significant jump. Look at how much inventory jumped in Santa Clara County. We went from 57% of typical inventory to almost 80%. That's a pretty major jump to happen in just 1 week. What's really going to be key is to see how much that inventory gets eaten up now that it's available for buyers to take. Looking at San Mateo County, it also went up, but not nearly as much. It went from 87% to 91%. Condos in Santa Clara County also went up from 102% to 106%. And condos, Redwood City and the Bay Cities, went up to quite a bit as well. The reason this is crossed out and in blue is it's 2.5 times the inventory you'd expect. You'd expect the market to be cooling. But what's happened up there is there's been a lot of townhouses, condominiums built, especially in Redwood City, which is the lower area for that particular micro market area. And that's really increased the volume. The key is when you look over here at days of unsold inventory, it's one of the hottest marketplaces, which is not what you would expect. And just since I'm commenting on it, for those that weren't listening for last week, I did have a reversal between San Mateo County single family homes and Bay condos for a while, but this is correct as far as I can tell. Now, days on unsold inventory, this is the pace of the marketplace. So you can see you went from 20 to 25.5, pretty significant increase. Typically, I say 5 days of increase in a week is starting to be my threshold of concern. Did the market change? I think it's too early to tell. First, we're so far into a seller's marketplace. Second, if it's a flood of inventory, which you're seeing over here, the buyers haven't had a chance to buy that inventory yet. If the buyers come out of the woodwork like I expect them to do next week, we'll drop down this inventory and we will see this DUI drop down. But it is interesting that Santa Clara County single family homes had a large increase in listings available, but the new stuff coming on the marketplace wasn't that significant. It's just, I'm not throwing up the red flag yet, but it's something to watch next week. I think we're 1 week short of seeing a trend because we need to see what the buyers do with this extra inventory. I think the buyers are going to come and buy it. Now, Santa Clara County single family homes, which has been the hottest marketplace right now, is one of the coolest marketplaces at 25 days. Hottest, as I said already, was Bay City condos, followed by Santa Clara County condos, and then single family homes in San Mateo County. Now, single family homes are underperforming condos and townhouses. It could be interest rates pushing people to condos being more affordable. Now we're looking back at the overbid. This requires sale price, so it's lags by 5 weeks. 91%, that's very strong. 91% of the sellers getting more than their asking price, and they're getting 17% more than their asking price. I mean, you can't complain. Single family homes in San Mateo County, basically around 88% of the sellers getting more than their asking price, and they're getting somewhere around 16% above their asking price. Condos are coming up. It seems they're at 85% and 181%. And this is where they're really coming up, is on the overbidding. They're up to 112% and 108%. Appreciation, mine is a little different than most people's. My base is the entire calendar year of 2020. And then what I looked at is the appreciation for the given week. So last year, this is the year where we had peak appreciation. So you had 25% appreciation in single family homes. That happened back at the end of June. So San Mateo County had 4.5%, happened at the beginning of December, et cetera. If you now look at the current appreciation in Santa Clara County, you're at 42%. So you've had, what does that work out to be? 17% appreciation since June of last year. Very strong. San Mateo County single family homes, you basically have had 10% appreciation, but just since December. In condos, you've had 19 to 33, so that's about 14% appreciation if I'm doing my math right, and that's since August, so that's about 3/4 of a year. And the Bay Cities has actually gone down. Last year it was at 15.7. This year it's only at 10. So they've actually lost, on paper, the median for that micro market area, 6% of the value. But I suspect it's more to do with the market mix of what's coming on the marketplace, because when you only have 18 days of unsold inventory, you do not expect to be seeing any price depreciation at all. This table is a little convoluted and I don't have a lot of confidence in it yet. I'm having major discrepancies between the two MLSs that I tend to pull data from. What it's trying to do is show the offers that are accepted. And this is based on that Mercury News article a little bit earlier about how weak the market was. And they were talking about closings in the month of February, which were really offers accepted in the month of January. And you can see January did start off to a slow start, where we had the fewest number of transactions, offers accepted for the first 2 weeks, and then the third and the fifth lowest. But that's also mostly a calendar event. Remember, we've talked about this, where I think January 1st was on a Saturday, and that starts my week number 1. And so you basically had a holiday still in the first week, where normally you don't. If you slipped all these up 1 week, it would disappear. And then you can see February was really strong, with the only year outperforming it being 2021, where there was an abundance of demand because of the COVID curtailing the 2020 active season in the first quarter, delayed by 1 month of the real estate market. And then you can see there was a pause right here around early middle of March, which I think is just about when Russia invaded Ukraine. And I think buyers took a little bit of a pause, but then they came back, and, second most active, third most active, outperforming 2021. And then the last 3 weeks, we've all been the second best, only second to 2021. My biggest pause on this data is there's a huge discrepancies between the two MLSs. The other thing I'm trying to do is make life easier on me. And instead of doing the week, which the dates change every year, I'm actually going to start on the first of every month and go for a week. Here's your 1 week, 2 weeks. And so next week, I'll do the 29th through early May, and then after that I'll go May 1st to May 7th, etc. So it's going to be a little bit different, but it makes it a lot easier for me to acquire the data. So I want to resolve the significant differences between my two sources of raw data. They should be the same. They're both claiming to be sharing the same database, but there's something wrong with the user interface. I do believe these numbers are accurate. I just don't have the confidence because of that discrepancy. Here is, again, some data, and I try to again approach some of the media coverage. Normally, I just talk about Santa Clara County, CL, and San Mateo County, Matt, over here. Here I've added in Alameda County and Contra Costa County, because you can see they're roughly the same size as Santa Clara County, and they're quite a bit bigger than San Mateo County. Same sort of data, just a little different, way abbreviated. I'm looking at the number of new listings, the number of active listings, the ratio between the two, the number of offers accepted, the DUI, which is real key. And what you can see here, here's your single family homes. So in Santa Clara County, 25, it's actually the slowest out of the 4 counties for this past week. And in condos, it's actually the fastest, and that just shows you how different the market can be based on the same geographical area, the different types of properties. And this is the combine, and I question the validity of that, but if someone wanted to just get a snapshot, it's somewhat valid. And the reason I don't believe it's valid is a combined product does not exist. Then number of closings, the average and median days on the market for those closings. And on the sale price here, the list price, that is not for the entire population. And that's, again, just to make my data acquisition a little bit easier. It's all the transactions that have only been on the market for 30 days or less. And that's the vast majority of them. And the data that's crossed out here is from a couple of weeks ago. I may or may not resurrect that. I'm working on getting rid of the discrepancies between the database. I believe this is accurate. This is not me crunching the data, and I'm seeing a couple red flags, but not nearly as many red flags on this as on the previous slide. And with that, I'm available to see if anyone's got questions for me. To come join me live on Saturday morning, you put in the green URL here, which is what I call the root URL. Then to get the handout, which I did get up, but only about 2 minutes before the hour, I try to get it up about 1:45. You add in H for handout, and then 2022 for the year. And then today you would add in 0 for the month and 30 for the day. And to join me live, which I would appreciate, you just add 2022 to the root URL at 9 o'clock on Saturday mornings. So with that, I'll pause for a second to see if anyone has any questions. Not seeing any questions, I'll proceed with the details. Now what we're doing is looking at the details a little bit slower and a little bit more detail in the different micro market areas. So DUI is the most important indicator, in my opinion, supply-demand ratio. And the concept here is the redder the color, the quicker the marketplace. So real quick, you can see that Foster Cities is the reddest, and it's only at 7 days of unsold inventory. You can see the no color is expensive areas because it's in the balanced range, which is like from 42.5 to 77.5 days of unsold inventory. But most of these numbers are much higher than they were last week. We're seeing numbers approaching 30. The teens is where we had been. I suspect that numbers will go down next week. We'll find out. San Mateo County is outperforming Santa Clara County right at the moment. You can see that, Santa Clara's got a lot of 27s and essentially 25. You come down to San Mateo County, and the highest area is 24.8 if you ignore their expensive areas. And the expensive areas are Menlo Park, Atherton, Woodside, Portola Valley. Foster Cities is a real small area, so it really isn't that big of a thing seeing that at 7. You can see overall, I'm saying that San Mateo County is at 28, so actually Santa Clara is a little quicker. There's going to be a little bit of discrepancy between the different numbers, and that's just the different sources. I have more confidence in my numbers, which is what I'm reporting here, than what I was reporting a second ago that I thought showed San Mateo County outperforming Santa Clara County. Condos, you can see, are 20 days for the Santa Clara County countywide, the different micro market areas, the Bay Cities, you can see it at 18.8, and the North San Mateo areas at 32. The frequency of overbidding, still very strong, but again, this is 5 weeks earlier. So if there is a shift in the market, it wouldn't be reflected in the sale price yet. Frequency of overbidding, it's right up there, 95%, just shy of 95% for a lot of the areas. But, you can't get above 100%. Foster City is at 100. We've had Redwood City at 100. We've had Cupertino at 100. It is possible to achieve 100, but all it takes is one seller accepting a few dollars less than their asking price, and then you go from 100% to 97%, 94%, depending on how many transactions there are in that given area. Condos are not quite as common to overbid, but they're up there in the most part mid 80s, which is pretty strong. The magnitude of overbidding, which is how much, basically right around high teens. Cupertino Sunnyvale is actually getting up to almost a quarter over the asking price. Multiply whatever the seller is asking by 25%, and you're getting to what the typical overbid is. This is the average overbid, which gets pulled up when someone does 50% overbid. The median, I don't think is typically a better indicator, but for this is not, because a lot of times it would be right at about 100%. Over here, the sale price, not really an indicator, it's a lagging indicator, because you have to have the prices sold, you have to have them reported closed, but it helps consumers understand what micro market areas they can afford. The middle number is the median price for that particular micro market area. The number to the left is the lowest 10 percentile in that area. The number to the right is the most expensive 90 percentile in the area. County-wide data is reported in thousands. Individual micro market areas is reported in millions, and that's just done intentionally so that when you see the difference, you go, why is there point, why is it million, why is it K? You realize you've gone from a micro market to a county data. Same for condos, except for condos here, I set the white color to the maximum price and then just go down from there. And so there's no relationship in color coordination between the condos and the single family homes. Here is your number of new listings. So you can see for the last 3 weeks now, we were below where you'd expect to be. And that's the first time that we've really been that way. The first time it happened, I blamed it on Easter, but we've now continued that trend for 2 more weeks, which is saying that we're running out of new sellers to come on the marketplace, which will tend to keep the market up, but it's going to tend to decrease volume because there's no new listings for the buyers to grab up. Here's the number of new offers that are accepted in the past week compared to the normal. So you can see we dropped down for Easter. Then we went up for the week after Easter, which is exactly what you expect. You're slightly below the 5-year median, but I would probably call that right at the 5-year median. And that's basically what we've been doing this year. We've been closer to the 5-year median this year in 2022 than last year. Last year, you were clearly above. Here's the total active inventory that's available. Your total inventory is blue, is at 1,500 homes. You'd expect somewhere around 1,800. So we're a shortage of about 300. That's about 20%. That's better than the 33% shortage that we were having just a little while ago. You can see down here, the vertical separation is much greater than the vertical separation here. But again, there's still a lack of overall inventory. And do remember that my 5 base years, 15 through 19, were 5 good years. Even if we were above the base year, that would not be a huge red flag. Moving on to days of unsold inventory. Days of unsold inventory is the single biggest indicator, in my opinion, of what the future of the real estate market holds. It's a supply-demand ratio. Starting over on the right-hand side, the most recent column, the red is Santa Clara County single-family homes, and you can see that it went up last week, which I expected because Easter was the week before that. So sellers don't put their house going on the market going into a holiday. So that week's activity gets pushed back to last week. And then the buyers would have purchased it this week. It's the increase this week that surprised me in Santa Clara County single-family homes. That same increase is not happening in San Mateo County homes. In fact, it improved, which is what I would have expected Santa Clara County to do. And condos has gone up as well, not as dramatically, but has increased some. A word of caution, I wouldn't call it a red flag, because if we had an influx of inventory in single family homes in Santa Clara County, which we did, that would cause your DUI to rise. If in fact the buyers come up next week and buy that new inventory, everything's going to stay where it's at. If that inventory doesn't get purchased and DUI continues to go up next week, that would be definitely raising of a red flag, because Santa Clara County single family homes is the biggest marketplace. We saw that Santa Clara County went from 60% of inventory to somewhere in the 70s. That increase, although significant, is still way below 100%. So we still have a huge shortage of inventory. What happened so far is buyers that have been fleeing Santa Clara County for Alameda County, Contra Costa counties, even San Mateo County, may come back to Santa Clara County. So this is a key indicator to watch. We need 1 more week to find out what happens with the extra inventory that came on this week. But you can see that for the last several years, all the way back to 2020 and frankly, all the way back to 2015, DUI has been in the red shaded area for the most part, which is what I consider to be a seller's marketplace, favoring the seller as far as negotiations, significant appreciation, rapid turnover, multiple offers, and overbidding, all because DUI is so low. Here is the same information graphically. This is single family homes only. It's broken up into different micro market areas. You can see the absolute reddest areas right here at the base of the San Mateo Bridge. That's Foster City, Redwood Shores, and that's at 7 days. You can see the base cities is pretty strong also, and that's at 13.5 days. The rest of the marketplace for the most part is in the 20s, which is why it's pinker. More white has been added to the red to just show the market has slowed down from just last week. Here's the frequency of overbidding. This is back to macro data, single family and condos and townhouses, both counties all in a blender. You can see this year we've been basically running at 90% of the sellers are getting more than their asking price, up fairly significantly from 80%. Yeah, someone might say that from 80 to 90 is not big of a change, but it is because you can't get above 100. 100 is a flat ceiling that you can't go above. So as you approach 100, it gets harder and harder to increase that number above. And we've been running pretty much right at 90 this year, which is 10 percentage points above where we were running last year. So that's pretty strong. This information lags behind by 5 weeks, roughly, for the time it takes to close an escrow, because it needs sale price. Here's the overbidding of the three major components. You can see that San and Clara County condos dropped down. That is probably just a bad data point. It's unfortunate I didn't have time to correct it. You can see San Mateo County rolled over. San Clara County single family homes is basically fairly flat. You can see that it's essentially at record high numbers. Yes, it's not at the record because the record for Santa Clara County would have been here, San Mateo County here, condos and townhouses here, but it's all in the same order of magnitude. This is the frequency of overbidding of single family homes only. You can see it's much higher than the 90% overall because we've dropped out the condos and townhouses, but you can see how red this chart is. That indicates a red hot seller's marketplace. Once you get to 95, it's saturated red. So many of these areas are approaching 95. For the most intention purposes, this is going to look saturated red to most people. Los Altos, Palo Alto is at 82, so that's far enough away. You can see some pink. You can see some pink over here in Half Moon Bay, and that's down at 89. So at 5 percentage points away, you can start seeing it, but the bulk of the area looks very saturated or close to saturated red. 92 and a half, 92 and a half, 92 and a half, 94 and a half, 93 and a half, 93, 94, 92. 91.2. So saturated red at 95 is pretty close when you go all the way down to 50 before you get to white. It looks red. It is red. There's a lot of overbidding. This is the magnitude of overbidding over time. You can see that last week we jumped up, but remember, this is not what's happening in the market just last week. This is what the escrows that closed last week. And really what happened is there was a dip. It's surprising to me. You can see how sawtooth this number is. It's surprising to me. I would have expected it to be a more stable line, but it's one of the data points that really does fluctuate quite a bit from week to week in a sawtooth manner. So it's really hard to predict the market using this type of data. You don't know if it's a market shift or just a fluctuation in the data. Here's the three major components. You can see that both single families have clearly rolled over. Santa Clara County is the nicer behaved. San Mateo County rolled over, plateaued, and then dropped. Condos in Santa Clara County sort of leveled off. Condos tend to be more slow and steady. Single family homes tend to be more erratic, where they do the big run up in the first quarter, delayed by about a month, and then get a little bit of overshoot, a little bit of a correction, and then do the same thing the next year in a normal year. Here is the distribution, single family homes only. So again, the numbers are higher at 117 and a half. You're saturated red. There's an awful lot of red. There's some pink down here in Morgan Hill, and that's at 110%. Pink up here in Los Altos, Palo Alto at 13, almost white in the expensive areas at 104 and a half. The coast is pink at 112. So again, the concept is the same. The higher the frequency magnitude of overbidding, the redder the color, the less the pinker the color. Here's pricing, median only. Normally I report on the 10 percentile and 90 percentile as well, so you have a sandwich, but most people just report the median. This is just showing you it over time. You can see Santa Clara County single family homes, how it does this rapid rise up, then a steady rise, a little bit of a correction, rapid rise, a little bit of a correction coming up most likely, and it just tends to repeat. San Mateo County is a little bouncier because the prices are higher and there's also fewer properties. Here's the 10 and 90 percentile as well as the median. The median is the middle number, 10 percentile on the left, 90 percentile on the right. Colors are assigned as pink above the median price, and the median price is almost always going to be Redwood City at 2.4 million. So above that you go pink, below that you Condos and townhouses are not included, so it's single family only. Here is looking at appreciation of each of the different micro market areas in single family homes only. I could put up condos if people would be interested, let me know, but right now it's only single family homes. The highlighted yellow is the record high or tied to the previous record high. So you can see a lot of the micro market areas are right now at their peak. Some micro market areas were peaking more back around the beginning of March. There's just some fluctuation. Santa Clara County wide was just last week. So there's, it's no real change, 0.3%. And again, to calculate this, I'm comparing it to the entire calendar year 2020, comparing it to escrows that closed during the past week. This is not comparing apples and apples, but I think it's valuable to do. And that's because I'm looking at April data, which I can't get until May the 6th. There's 30 days in April. I need the first 5 days in May to get to 35 days for my statistical quality assurance. Basically, if you do monthly calendars like most people do, there's a lot of fluctuations in how many days record in any given month. You can see inventory jumped up quite a bit from last week. We're now at 777. So we have more inventory now than we did last year. And I think that's the first. You can see days of unsold inventory at 25.5. That is not only not a record, it's actually the third, because last year was at 17. And in 2018, we were 24.7. 2018, for those that don't remember, was pretty strong. In fact, it was May, I think, May of 2018 that was the strongest amount of overbidding until March of this year. The fact that we're very, very close to essentially what was a record year is pretty incredible. 2021 was a lower year on days of unsold inventory. I think that was more just the huge amount of buyers that were coming out of the pandemic, the inability to buy in 2020. These numbers I wouldn't really expect to change significantly between now and May the 5th. Coming down and looking at the number of closings, I would expect that number to go up. So now we're closing way more than the pandemic year, which makes sense. But other than that, we're the lowest. But I do expect this to go up some more. We probably will catch 2019. We may catch, 2018, which is roughly the same. The volume of transactions is letting up a little bit. We are going to see a fairly significant increase when we get to the end of the month, the end of April. End of April is going to be more significant than the end of March. It's possible that we'll come in. We're not going to beat 1,400. I mean, I would almost eat my words at that. I could believe we could beat these 1,100, 1,200 range, but that's the best we're going to be able to do. So we may have the second best volume of transactions. Coming down to closings, 116%. That is a record high. But again, this is lagging back about 5 weeks because now you need sale price with 91.4% of the sellers getting more than their asking price. Again, that's a record high. And again, that's a lagging indicator. And of course, the prices are at a high. This is actually down. I think it was last week we were at 1950. So we've come down 5,000. It's basically a plateau at that level with some noise. This could be ready to jump up to 1950. The 1950 could have been ready to jump down to 1945. There's just no way to know. So I'd call that even. This is comparing apples and apples, but it's in the rearview mirror because March data is available on April the 5th. I'm not going to go through all the details, but it's there for people that want it. And with that, we're back to the URLs. Get your questions ready. The green URL is the root URL. That gets you to the YouTube archive of these sessions. If you put in 2022 for the year, you get to the live session Saturday morning, and I would appreciate if some people would actually join. The handout, you add in H for handout, the 8-digit year, month, date code, which is 2022-0430. And to get to any specific episode, you do that. Add in the same 8-digit code without the H. With that, I will pause and see if there's any questions. Not seeing any questions. I'll hope everybody has a great week and see you next week. Take care. Bye for now.